Hi friends, in this market correction, almost every sector has been beaten down badly. For example, if you look at Nifty Auto, it is down by almost 25% from its peak. Have a look at Nifty PSU Bank, it's down by almost 30% from its last peak in June 2024. Nifty Realty, down by almost 30%. Nifty Consumer Durables, down by almost 21%. FMCG, down by almost 23%. But the billion-dollar question is that which sector out of so many sectors is likely to see the strongest recovery once this stock market bottom is found, once the stock market settles down a bit? And to answer this question, percentage fall alone is not sufficient. We can't really say that XYZ sector is down by 30% and it can go back up by 30%. It doesn't work this way. What we really need to look out for is the valuations in a sector. Have a look at the government push or the capex spending in a sector. Have a look at the earning growth, demand cycle. A lot of factors go into finding out which sectors are looking very, very promising once the stock market finds its bottom. So in this video, I'll give you 100% data backed commentary on 3 sectors which in my view are likely to see strong recovery once the stock market finds its bottom. Throughout the video, I might take few names of the stocks here and there to give you some practical trends. Please do not take them as recommendation, but my promise is that every word I speak will be backed by data. Let the data talk. Just before I start, if you're looking for data-driven AI model, Growth School is offering fantastic hands-on AI training which is free for first 1000 people. The AI sector is gearing up to create some big successful stories, and therefore people who are building AI skills today are going to enjoy phenomenal career growth tomorrow. In this hands-on training, you will learn how to use AI to sort data in Excel quickly, how to frame business strategies using AI, how to search for good paying jobs using AI strategies, how to use AI for salary hike and salary negotiations, how to build personal brand using AI, and more than 25 plus AI tools. Investing your time in your own growth must be your top priority for today. Otherwise, there is a risk of becoming irrelevant tomorrow. That's why I will recommend you to join this hands-on AI training, which is usually paid, but this time it is free for the first 1000 people. The link is in the description and in the pinned comments. Register now. The first sector which is likely to see strong recovery after this crash, in my view, is likely to be NBFC and micro loans within the financial services. And the key reason for this is Sanjay Malhotra's appointment as the RBI governor on 26th of December 2024. Why? Because just in 2 months of he taking over the RBI governor seat, what he has done is he has reversed a very, very important decision for NBFCs and microloans. I'm going to run you through this extremely important update, but impact of this decision is that almost 4 lakh crore worth of liquidity will be unlocked in NBFC and microloan segments within financial services. So what is this landmark decision? So if you go to RBI's website on 25th of February, you will find 2 circulars that have come out. What are these 2 circulars? Number 1, you see on my screen. Again, there is a lot of technical details here. Let me try to simplify this. So what happens in the financial services value chain is the banks are offering loans to NBFCs, and NBFCs are then finally offering loans to the consumers like you and me. So this is the supply chain, which is from bank loans go to NBFCs, and from NBFCs loans go to consumers. Now the circular one that you see on my screen, what it is stating is that when banks are giving loans to NBFC, for example, ICICI Bank is giving 100 rupees loan to, let's say, an NBFC called Credit Access Grameen. Now what ICICI Bank had to do earlier was that if they are giving 100 rupees loan to Credit Access Grameen, they had to keep 125 rupees aside because the risk weightage attached to loans from banks to NBFC was 125%. This RBI circular has reduced that weightage from 125% to 100%, meaning going forward, banks, when they are giving loans to any NBFCs, no matter what segment they are operating in, the risk weightage will now be 100%. They will only need to have surplus capital by 100%. Now what this will do is that the loans from banks to NBFCs are likely to go up because the cost of borrowing now is likely to get reduced. This is a landmark decision that the RBI has done. And just so that you understand, prior to November 2023, this risk weight used to be actually 100%. Only in November 2023, at that time, RBI had made a huge change. Seeing the risk in NBFC loans, they had increased this to 125%. 5%. But now since Sanjay Malhotra comes back and he has seen that the loan growth in India is going down, what he has done is he has reversed that decision of RBI that was made in November 2023. And as soon as this decision came out from RBI, I had written a detailed community post for my YouTube community members so that they understand the exact details of what has happened recently. So if you want to get these timely updates, you can consider joining my YouTube member community because these details really matter. Now coming back to second circular that is on your screen, again I will try to simplify. There is a lot of English here, but let me try to simplify it. The second part is that any NBFC that was giving micro loans to consumers, those loans NBFCs had to keep 125% weightage. Again, the same rule applied to them as well. But now RBI has again reversed that decision and it is saying that any micro loans given by NBFCs to the consumers, you don't need to have 125% risk weightage. You can go with 100%. Now the impact of this will be that NBFC will no longer need to keep 125% of capital in order to disburse any loans. The capital requirement will come down and therefore the micro loan sector is likely to now boom in my view, and therefore we are likely to see good growth coming, good earning growth coming in the micro loan segments. Now these changes are going to be taking effect from 1st of April 2025. So we might not see immediate uplift in the earning growths of micro loan or NBFCs companies because it will take at least 1 to 2 quarters for us to see that impact. But guess what? Stock market doesn't work like that. It is trying to anticipate this growth coming up in the first or 2 quarters, and therefore the stock prices may move much earlier than 2 quarters down the line. I hope this update was really clear to you, but if it was not, let me know in the comments. I'll try to pick up your questions and try to answer those as well. Now you may have a natural question that, Rahul, which stocks are likely to do better when it comes to NBFC and micro loans? So in my view, any NBFC that is operating in micro loans, that has got the sweet spot because they are going to get benefited from both the circulars. A, because they are NBFC, and B, because they are operating in micro loans. So both the circulars are going to directly positively impact them. So which NBFCs are operating in micro loans? So for example, number 1 is Credit Access Grameen Limited. It is India's largest micro loan NBFC as far as I know. And if you look at the data, you will note that almost 93% of their loans are micro loans. They are income generation loans, meaning they are micro loans given to individuals or group loans. And therefore, in my view, Credit Access Grameen is likely to see the positive impact. I'm not saying the stock prices will go up because the stock prices depend on many other factors, but from this policy impact perspective, huge positive impact for Credit Access Grameen. Please do not take this as a recommendation, but I've tried to give you a way in which you can go and analyze these companies. Second company, for example, could be L&T Finance here, because if you go and see the L&T Finance's loan portfolio, you will note almost 61% of their portfolio is rural group loans or MFIs or micro loans. This is how you can go and check the quarterly results or yearly annual reports and check the MFI keyword or micro loans, or even personal loans is included in that update as well, right? So for example, L&T Finance, 61% portfolio is in micro loans. It's an NBFC, likely to see positive impact because of RBI. Now also understand the circular 2 does not only get limited to NBFCs. It is in fact valid for banks. It is in fact valid for small finance banks like Ujjivan Finance Bank here, which has got almost 45% plus 15%. Almost 60% of their portfolio is towards the micro loans. So a small finance bank like Ujjivan Small Finance Bank, who have got high proportion of their loans to micro loans, are likely to see benefits of these RBI policy updates. So I hope you are very clear why I am speaking about NBFCs and micro loans. Please do some research at your end. Try to find out the stocks which are beaten down by, let's say, 30%, 40%, 50% from their peak. They are operating in NBFC, they are giving micro loans, they are having good healthy NPAs, and that's how you go and find your stocks. If you like this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to bring such content for you at zero cost. With that, let's move to sector number 2. The second sector that I think is likely to do much better when the stock market finds its bottom is auto sector. Have a look at my screen. You will see auto sector has gone down by almost 25% at the time of recording this video, which in my view is a significant fall. And one of the key reasons I'm right now bullish about auto sector is that in the recent budget, I in fact created a separate video on budget, but in the recent budget there are a lot of incentives and policy push that was assigned to the auto sector, especially the EV segment of the auto sector. For example, National Manufacturing Mission will be launched, PM E-Drive scheme has been funded, PM E-Bus scheme is likely to be there. A lot of auto and components PLI was increased. So for example, if I give you the data here, in fact auto sector and auto component was the second highest sector in terms of getting the PLI allocation, which is production linked incentives. It went up up from 346 crores to almost 2,800 crore. It's almost 9 times increase in the PLI incentives that auto sector is likely to see. Again, I'll speak about the EMS sector in a minute, but in my view, auto sector has got the right push coming from the government in terms of PLI policies. Therefore, the volume production is likely to be there. Now, the second point here is that within auto sector, I am more bullish about the two-wheelers. And the reason for that is, if you look at this report that came out from Axis Securities, the demand for the two-wheelers is likely to grow in early double digits. And if you look at the PV, which is the passenger vehicles or the commercial vehicle CVs, the growth is likely to be in single digit. But it is the two-wheeler segment that is likely to see double-digit growth. And I think that is where, from a demand perspective as well, if there is likely to be good demand, then two-wheeler stocks are likely to see earnings growth. And therefore, we might see some momentum after this crash. Another reason I like two-wheeler sector right now is come 1st of May, when people start to see the benefits of income tax reduction in the budget. Up to 12 lakh has been given as the income tax free in the new budget. That is likely to leave a bit more money in people's pocket, and motorcycle sales or scooter sales is likely to be revived in my view. And therefore, after 1st of May, we might start to see month-on-month improvement in the two-wheeler sales. My last point on two-wheeler sector is also from the fact that if you look at the earnings growth, if you look at the year-on-year quarterly profit growth, almost Bajaj Auto, Eicher Motors, Hero MotoCorp, TVS Motors, all of them have shown positive healthy growth, 8%, 17%. Hero MotoCorp not so much, 1.3%, TVS Motors 18%. The point is very, very simple. When so many other sectors and companies are showing decline in their earning growth, these 4 companies which are leading in the two-wheeler segment have shown positive growth in the earnings. And after 1st of May, if the sales pick up because of the budget boost as well as income tax reduction, then hopefully the earnings are likely to improve further. And that's where my conviction comes from, that two-wheeler sector within the auto is likely to see some good momentum, because all of these stocks are down right now. If you look at the valuation perspective, industry PE ratio for two-wheelers specifically is 43. Majority of them are well below that. And therefore, in my view, from a valuation perspective also, two-wheeler segment is looking very, very attractive right now. Again, I'm not giving you any recommendations about these stocks, but I've given you just an overview of where to look for opportunities when the market is falling like crazy, because there is going to be a silver line after this fall. In fact, very recently, I had created 2 community posts for my YouTube member community, giving them the sales breakdown from the auto sector, mainly covering a lot of companies, for example, Tata Motors, for example, M&M, Hero MotoCorp, Bajaj Auto. What is actually happening in these companies from sales and profitability perspective? Because every month auto sector issues the sales data, and that is extremely important for you to understand what is happening in the auto sector. If you're not yet a YouTube community member, I would request you to consider joining my YouTube community. You are going to learn practically. The feedback of this community has been excellent. Simply go to my channel, press on join button, or you will find the link in the description or in the pinned comments. With that, let's move to sector number 3, which is likely to see good recovery after this crash in my view, and I will present you some data and facts. The sector that I'm speaking about here is the EMS sector. In fact, just last month I had created a full video on EMS sector where I spoke about the conundrum of growth versus valuations, because in this video I spoke about the growth EMS sector is seeing really very, very high growth, but at the same time valuations are somewhere here because valuations are chasing the growth. But what this correction now has done is that the valuations have cooled down, because many of the stocks have crashed by 30%, 40%, right? So there is a good opportunity now in my view in the EMS sector because the growth is intact. Why do I say the growth is intact? For that, let me now present to you some data. See, data point number 1 is that government continues to push money into EMS sector. Have a look at my screen. You will see that the PLI push that the government has been doing in EMS sector has now gone up, in fact. So in budget 24-25, it was supposed to be 5,777 crore. But now 25-26, government has allocated 9,000 crores for the EMS sector. That is almost twice the allocation we saw in 24-25. Isn't this a good number to look at? Absolutely, this is a good number to look at, meaning that EMS companies now are going to enjoy this PLI. Their cost of manufacturing will come down because they can claim the money from government, and therefore the profits are likely to see positive impact. Therefore, I am very, very bullish about EMS sector. Second factor that you need to note is, if you look at my dashboard here, I've got almost, 8 to 10 EMS companies here. None of these are recommendations, by the way. I'm now presenting you some data that will make some meaningful discussion points for us, right? Have a look at my screen. You will see the year-on-year quarterly sales data. All of these companies have grown their sales by more than 20%. Have a look at Dixon Technologies. Their volume, the largest mobile manufacturer, has gone up by almost 117%. Their sales is up by 117%. Have a look at PG Electroplast, 81.9%. Ember Enterprises, 64.8%. When you see almost all companies growing by more than 20% year-on-year basis in terms of the sales, that tells you that EMS sector continues to be on fire right now. What about profitability? Have a look at the year-on-year quarterly profit, and you will see that except two companies here, EPAC Durables and Cyan DLM, for these two the profits have declined, but other than these two, if you see, the entire pack has shown phenomenal growth in the profits. Again, have a look at these numbers for yourself and you will see that when a lot of companies in other sectors are seeing degrowth in the earnings, here comes EMS sector where see huge earnings growth as of December 2024. And the PLI scheme that I spoke about earlier is likely to see more volumes being produced by these companies. Their profits margins are likely to also improve, and therefore I remain very, very bullish on EMS sector. Now you may have a natural question that, Rahul, out of these stocks, which stock should I pick? Again, I can't give you any recommendations here. I would highly encourage you to go and watch my previous video. Also, if you would like me to cover any of these stocks from a business model perspective, from their sales perspective, from their cash flow perspective, from their PE ratio, PB ratio, PEG ratio perspective, let me know in the comments. I'll go through your comments and see which stock or which company has got the maximum comments. I'll try to bring a dedicated video, or maybe I'll cover 2 to 3 companies in one single video to give you a lot of details about their business model, their issues, their challenges, their risks, their opportunity, and everything in between. Also, I would like to hear from you which sector in your view are likely to see strong recovery after the stock market crash is over. Please let me know in the comments. This is how we can learn from each other and can build a strong community around us. Also, please check out Growth School's hands-on AI training. You are likely to learn a lot without paying a single penny from your pocket. With that, I hope to see you in my next video. Until then, keep rocking.